Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Dr. Rufus Rankin, Director and Head of Empirical Index Research at Nasdaq, to discuss how financial advisors are viewing market risk and risk management. Rufus, it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me back. It's great to be here.
You got it. Give us a high-level overview of the risk campaign that the index team is managing right now.
Sure. So we're running this risk campaign, and what we're focusing on is how we work to identify risk and also how to manage it. And a big part of this campaign is we really want to understand what financial advisors are facing and how they think about risk and how they try to manage it. So what we did was we partnered up with Wealth Management IQ, and they performed a survey of 448 advisors to gauge their views on market risk and risk management.
And so, Rufus, what were some of the key findings from the survey?
So this survey yielded a wealth of information. So just background, about 37% of those respondents were RIAs, but we had respondents from all over the financial advisory enterprise. And the average AUM of the respondents was just over $400 million. So some interesting key takeaways: 93% of financial advisors say they actively manage portfolio risk for their portfolios. 77% of respondents expect to make changes to portfolios based on risk factors in the year ahead. And top concerns included recession, but also geopolitical risks and inflation.
And you reviewed these results and discussed the ways to assess and manage risk on a webinar produced in September. It's my understanding it's available for replay now and CE credit. What were some of the highlights from the webinar?
That's right. So we dug into the survey results in detail, and that was a big part of the webinar. But also Ian Saunders and Ian is my colleague on the Nasdaq Dorsey Wright team. We jumped into different strategies we can use to actually manage risk, and there were several. So one thing we looked at were dividend strategies for equity exposure with less sensitivity to market sell-off. We touched on a recent journal article that our team published in the Journal of Beta Investment Strategies that covers how option strategies can be used to generate income and reduce the risk of equity exposure. And we also talked about Nasdaq Dorsey Wright and how they offer more than 100 different tactical models that seek to overweight strength and avoid weakness using a systematic rules-based approach.
And finally, Rufus, where are some areas people can go to check out the resources?
Sure. So number one, looking at the resources we have up here, we do have a bit.ly link to the replay of that webinar. It's available on demand. And like you pointed out, you can earn CE credit for this. But we also have several other resources available, including the survey results, which should be live on wealthmanagement.com in a few days. A link to the JBIS article on option strategy indexes linked to the Nasdaq 100. We also have a link to index R&D research. We have so many pieces of content that we put out. Then don't forget, Nasdaq Dorsey Wright can also be accessed via the link there. And then finally, this came up. We had so many great questions from attendees at the webinar. We talked about things like alternative risk measures. We talked about crypto. So I did want to share the Nasdaq Advisory Academy on digital assets, and the link is there as well.
All right, Rufus, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you very much.